how do you make money when the market is going down? Traders, we've been seeing months of sell-off in the stock market, and many of you have been asking me this question.
Oh, trader, how do you make money when buy low, sell high no longer works?
Well, then you need to learn this new trading strategy, the technical bounce short setup, which is the exact strategy I use to trade stocks like GME, AMC, Sava, and made some decent profits while limiting my risk. To make things very easy for you to understand, I'm going to demonstrate how to execute this strategy in 3 steps. Price action leading into the setup, executing the strategy, and most importantly, risk management. It really takes me hours to plan and make my trading lessons easy to digest for you guys and girls. So all I need from you is to comment down below and let me know if you get some value from these kind of videos. And don't forget to smash the like button. I appreciate it. In the simplest terms, when you are trading this technical bounce short strategy, you're looking for stocks that have failed to break out in order to short into. Because if a breakout fails at a key level, there's a high probability of the stock unwinding to the downside. And that is how you can profit as a short seller on this particular strategy. The first step to trading the strategy is to look for stocks that's selling off after a failed breakout. So in this example here, we have the stock AMC, which is a stock that you should all be very familiar with. So we can see on this particular day, AMC broke out through that $7 key level on the daily chart. And why that's the most important level? Looking at the daily chart, you can see the $7 line here. It's been rejected prior days multiple times, and that was also the previous support levels on the daily chart back in September and all the way back here in around June and July. So that's why we know that $7 key level area is significant. So you can see on this morning, when this thing had a high volume breakout on the 5-minute chart, you can see on the 5-minute volume candle down here, there's a lot of volume breaking out of the average, right? If you look at the last couple of trading days, the volume was never this high until this day. So when it broke through that $7 mark, it went through all the way to 710, 720s, and that's great and all. And you can see on the charts here, shortly after breaking out of the $7 range, the stock actually rejected the high 720s and cracking down below that $7 once again. And if you've been watching all the lessons I posted on this channel, you know that if a stock breaks out but fails to hold that breakout and actually break down below that key level, that's what we call a false breakout or rejection on the daily. And this kind of price action is exactly what we need in order to short into. One more thing to note, since we're talking about AMC here, we need to bring up GameStop, which on the same day it's trading with AMC move, GameStop GME actually gapped up pre-market, as you can see here. On this day pre-market, it gapped up all the way from $28 to around $30. And that thing also broke out and tested some key daily levels. So the exact same price action as AMC. So you can see GameStop did very similar price action. It broke through these two daily breakout areas at $32 and $34. However, it was also unable to hold the breakout. You can see once it broke through $32 on the $34.50s and then came all the way back down. And these are like 5-minute candles. I believe there was some volatility holds involved with GameStop. But after it broke down 32s, you can see this thing just sold off all the way to a downside. So just remember, these two meme stocks, they often follow each other. So save these charts on GameStop and AMC if you need to. Essentially, we're looking for a stock to break out, test those key daily levels, right here, 32, 34, and fail to hold those levels and came all the way back down. That's gonna be the first step of the strategy. Before we move on to the second step of the strategy, I know we're talking a lot about short selling here, but for those who prefer to trade on the long side, meaning to buy low and sell high, I have a free course that's going over my favorite long strategy in the market right now, including risk management. So if you're interested in the free course, you can get that through the link down below. Okay, moving on to the second step of this trading strategy. You need to wait for a bounce after the failed breakout in order to short into. Essentially, the crucial part about this step is to wait for the perfect entry point when you are short selling these stocks. So looking at the AMC charts here, you can see, even though yes, I did start in early around $7, $7.10, but I only added into the short position once the thing had broken down into 680s and then started bouncing towards that $7 again. So this $7 mark around the VWAP area, 690, 693, these are my entry points for the short side. Very important here, do not short weakness into support areas. If you need to, then make sure it's, with partial size, maybe 1/10 position. I would always wait for the bounce to add into bigger positions on the short side when trading this strategy. By waiting for the bounce, this will provide you much better risk reward on your trades when you are executing the strategy. So that's why on this AMC short, I waited for that $7 bounce area to add it into my position. And same idea for the GME short. I waited for the stock to bounce from $30 to around 32, 33 to re-add into the short position. Essentially, wait for the bounce, hence the name, the technical bounce short strategy. Moving on to the third step for executing the strategy. You want to make sure you're assessing the risk-reward ratio to the downside. Essentially, you want to make sure there's at least 1 to 2 or even better, 1 to 3 and more profit ratio in order to make it worth your risk to trade this particular stock. So in this AMC example, if we are getting short on this small bounce around the 690s area and risking the reclaim of that key level at 7, that means we're risking about 10 cents. Now, if we're risking 10 cents, we want to make sure we can at least make 20 cents, 30 cents, or even more to the downside. So let's look at the chart. Is this risk reward worth it? You can see from the chart here, if we are risking that $7, we're potentially trying to hold that short position towards that 680s ideally. 680s, you can see that's some pre-market levels, and even lower down here, we have about 670s. So that means if we entered at 690, we have potential downside to make 20 cents or even more if it goes all the way to prior day's close area around the 650s mark. So for this particular trade, the minimum risk reward is probably only about 1 to 2 or 1 to 3 because you're risking 10 cents to potentially make 30 cents or more. Now looking at the GameStop example, you can see that I got in way too early on the first trade on the short side. So I shorted around 31.60s, 31.50s, and risking higher day through $32. So I was risking about $1, which I took a loss for. But if you really look at the downside, if I risk $1, is there really $2 downside at the open? You have downside to about $30. So that's less than 1 to 2 risk reward. So the first trade was not good risk reward at all, and I'm glad I stopped out. But the second trade, once I started shorting the bounce around that 32.50s area, then I'm risking the previous highs around $33 right here. So let's just say I'm also risking $1, give it room, given that GameStop is a very volatile stock. Is there enough downside to make this trade worth it? Remember, we're aiming for 1 to 2 or 1 to 3 risk reward. So where can the stock possibly unwind to? Where can it fall under? So if I'm risking $1, I want to make sure I can make $2, $3, or even more. Below that $30, you have downside to 31, which is the pre-market highs area and also the opening lows. $31, $30, and potentially down to $29 and $28. So the downside is potentially $2, $3 for GameStop, and even more actually, went on all the way to $28. So the second trade has really, really great risk reward. So keep in mind, once you enter the stock short on this bounce area, $32, the risk is now over the previous highs, around 33s. And once it breaks down that key level, down below VWAP to $30, you want to move your risk down to that VWAP area. So that's how you keep on moving your risk down below, so you never turn a winner into a loser. And you want to cover into planned profit target areas around opening lows here, pre-market lows, and all the way around prior day's close. This technical bounce short strategy is fairly straightforward, especially if you're a beginner trader. But if you want to learn more about price action trading, then make sure to check out this video over there. And remember to get my free strategy crash course down below. Let me know in the comment section if you have any questions about this strategy. And remember to drop a like and subscribe. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.